The Gateway to the On-Chain Economy, a comprehensive guide to Coinbase, Coin. As of February 13, 2026, Coinbase Global Inc., ticker Coin, is far more than just a place to buy Bitcoin. Just yesterday, on February 12, 2026, Coinbase released its fourth quarter 2025 earnings, revealing a company in the midst of a massive strategic pivot. While the crypto winter of late 2025 has sent the stock toward its 52-week lows, dropping nearly 40% in just the last month, the underlying business is evolving from a simple trading post into a diverse financial infrastructure giant. For an investor today, Coin represents a high beta bet on the future of the internet's financial layer. This guide explores the company's new everything exchange model, the critical earnings data from yesterday, and the regulatory and market risks that every prospective investor must understand. 1. What is Coinbase, the everything exchange strategy? In 2026, CEO Brian Armstrong has moved the company beyond transaction revenue, fees from buying or selling. Coinbase is now positioning itself as the app store of crypto. The three core engines: consumer and institutional trading, the traditional business. While retail trading volume fell to $56 billion in Q4 2025, the company has compensated by becoming a global leader in crypto derivatives following its 2025 expansion into European markets. Subscription and services. This is the stable part of Coinbase. It includes staking rewards, Coinbase One, a monthly subscription for zero-fee trading, and USDC Stablecoin interest revenue. In 2026, this segment now accounts for nearly 41% of total revenue, providing a cushion against volatile market swings. The Base Network, Coinbase's own Layer 2 blockchain. By early 2026, Base has become a hub for on-chain activity, from social media apps to decentralized finance, DeFi, allowing Coinbase to capture fees even when users aren't trading on the main exchange. 2. Yesterday's earnings, February 12, 2026, a reality check. The earnings report released yesterday provided a sobering look at how the 2026 crypto downturn is affecting the bottom line. The headlines: surprise loss. Coinbase reported a net loss of $666.7 million, 2.49 cents per share, for Q4 2025. This was a significant miss compared to analyst expectations. Revenue decline. Total revenue came in at $1.78 billion, down roughly 21.6% year-over-year, primarily due to lower retail participation. The dip buying narrative. Despite the loss, CFO Alicia Haas noted that institutional dip buying remains strong. This sentiment helped the stock bounce slightly in after-hours trading, showing that the hardcore investor base remains loyal even as casual traders exit. 3. The 2026 market dynamics, high beta and high volatility. In early 2026, the crypto market is in a transition phase. Bitcoin has shed roughly 21% of its value since the start of the year, and Coinbase's stock has followed suit, hitting a 52-week low of approximately $141 this week. Why the beta matters. In finance, beta measures how much a stock moves compared to the broader market, S&P 500. Coin has a beta of roughly 3.7. If the S&P 500 drops 1%, Coin typically drops 3.7%. Conversely, when crypto markets rally, Coin often sees explosive gains that far outpace traditional stocks. In 2026, this makes Coin a primary tool for institutional hedging. When big banks want to bet on a crypto recovery, they often buy Coinbase shares instead of buying Bitcoin directly. 4. Institutional adoption, the ETF effect and beyond. One of the strongest pillars for Coinbase in 2026 is its role as the backbone of the institutional market. Custody king. Coinbase is the primary custodian for the majority of U.S. spot Bitcoin and Ethereum ETFs. Even when prices are low, Coinbase collects fees for safely storing these billions of dollars in assets. The suit and tie shift. According to recent 2026 industry surveys, nearly 76% of global institutional investors now plan to maintain or increase their digital asset exposure. Coinbase is the regulated on-ramp that these traditional firms trust, giving it a massive competitive advantage over offshore unregulated exchanges. 5. The base layer, the future of AI commerce. While investors focus on the stock price, the technological progress of the Base network is the hidden gem of 2026. Coinbase is using Base to pioneer AI to AI payments. In early 2026, they launched the Smart Wallet technology, designed to allow AI agents to send micropayments to each other instantly and for near zero fees. If you believe that the future economy will involve millions of automated software agents buying and selling services, Coinbase is building the infrastructure for that economy's bank. 6. Critical risks, the three big threats. Before starting an investment in Coin in February 2026, you must be comfortable with three major risks. Regulatory uncertainty. While 2025 brought some clarity via new legislation, the SEC continues to monitor staking services and stablecoins. Any unfavorable ruling could suddenly remove a significant portion of Coinbase's high-margin subscription revenue. Valuation friction.
Despite the recent price drop, Coin still trades at a price-to-earnings ratio of over 40x based on trailing earnings. This is nearly double the industry average. You are paying a high premium for growth that hasn't fully materialized in the current quarter. Revenue concentration. While diversification is improving, Coinbase is still heavily tied to the price of Bitcoin. If Bitcoin enters a multi-year bear market, no amount of subscription revenue can fully offset the loss in trading volume and asset depreciation. 6. Strategy. How to approach Coinbase today. With the stock hovering near 2-year lows after yesterday's earnings, the strategy for 2026 is one of cautious accumulation. The buy the fear play. History shows that Coinbase is often at its most attractive when the headlines are the scariest. With shares at $141, down from a 52-week high of $444, the downside risk is lower than it was during the 2025 hype. Dollar cost averaging, DCA. Because of the 3.7 beta, never all in on Coin. Instead, break your investment into 6 or 12 monthly installments. This allows you to capture the price at the bottom without being wiped out by a single bad week of crypto news. The Roth IRA advantage. Since Coin is a high-growth, high-volatility stock, many 2026 investors hold it in tax-advantaged accounts. If the stock eventually returns to its all-time highs, you won't have to pay capital gains tax on the massive upside. Conclusion. The infrastructure of the 21st century. Coinbase Coin in 2026 is a Jekyll and Hyde investment. On one hand, you have a company reporting quarterly losses and a stock price that is currently falling like a knife. On the other hand, you have a company that has secured its place as the custodian for the world's largest asset managers and is building the plumbing for an AI-driven economy. The verdict. Investing in Coinbase today is not a bet on next month's earnings. It is a bet that the on-chain economy will eventually replace the legacy financial system. If you can handle the volatility, the current 2026 dip may represent one of the most significant entry points in the stock's recent history.